hopefully everyone has found a seat and you're all sitting comfortably because we've got a lot in store for you this morning. First thing is we've got a special guest that's flown all the way over from Singapore. So Regina Lim is going to be our guest speaker this morning. Regina sits in Singapore in our capital markets division and heads up the research and consultancy side for the capital markets. So many thanks to Regina. Regina's just written a paper on Ho Chi Minh and the market from a regional point of view. So she's going to be presenting some of her findings from that report, and it makes a very, very interesting read. Excuse me for my voice. I'm a little bit suffering from man flu this morning, but my wife has completely drugged me up, and we should be okay. But anything I say this morning, do not pay any attention to. So, and I'll just blame it on the drugs. Right, without further ado, we'll crack on into our presentation this morning. Economic highlights, what we've seen year to date. So year to date, GDP growth estimated coming in at 6.1%. This is quite a way below that target figure of 6.7%. Estimated figures for the year we think is going to come in at 6 to 6.2%. CPI still tracking under that 5% target, 3.14% for the year. FDI, good news is, we're up in terms of disbursements year on year, 12.4%. So that number's looking fairly attractive. Interesting note from yesterday, VN index up to a 10-year high, hits I think 684 overnight. So very good in terms of the stock market and where we're seeing. I think that the stock market has now risen year on year about over 25%. So one of the best performing in the region. Just in terms of FDI, what we've seen, so 979 million newly registered capital into real estate, still ranking number 2 in the market. 39 newly registered projects. You see there the countries that are leading the way: South Korea, Singapore, Hong Kong and Taiwan. Predominantly what we've seen so far, all going, 70+% going in that manufacturing sector. Visitor numbers to Vietnam, again, we're on a bit of a roll in terms of visitor numbers for the year. Foreign visitors, 7.2 million, again up year on year, and overall domestic travelers are going to be tracking for a record this year. Interesting enough, China up 58%. Visitors from China and visitors from Korea significantly increase year on year. So we're seeing a lot of those groups coming back into the market, which is, I think, very good news. Some infrastructure highlights. Some of the current projects that are underway. There does seem to be continued investment into the infrastructure. Govat flyover under construction. Gomei and Cat Lai Bridge all under construction, and hope with the completion dates over the next 1 to 2 years. Moving on to the office market. I think you all know for Ho Chi Minh, supply, very little supply in the market at the moment. Fairly moderate demand. We're seeing demand picking up and rents on the up. So good news for landlords at the moment. Landlords are being more aggressive in terms of quoting rents, and what we're finding is most tenants are having to stay and renew until any new space is coming through to the market. So that supply, current supply, is standing at 1.7 million square meters. Regina's going to touch on the point about office supply in Ho Chi Minh and how it compares on a regional basis, because I think it's quite an interesting point. Latest supply, I mean, you all know Vietcombank Tower, Lim Tower, and Pearl Plaza. So nothing major on the office market at the moment. Interesting point is that vacancy rates now are down to a historic low. We haven't seen this vacancy rate since 2008. So 8 years ago, this is grade A and grade B supply, now tracking at 3.9%. This is a very, very low figure, which is causing our leasing team a lot of headaches because there is very, very little supply in the market. One new space that's coming up, Mr. Brian, special mention for you, who's, I'm sure I've seen you somewhere here. The new executive floors on the 53 to 65 are being launched, I believe, today or tomorrow. Yes. Average net rents, because of that supply, very little supply in the market. We're seeing the landlords being slightly more aggressive. So average rents edging up, 38.6 on grade A. That's up about 2.3% year on year. And the grade B and and the other grades up as well. Grade B up 6.1% on the year. So year to date transactions and what we've seen, I mean, I think this is quite an interesting slide because compared to the previous year, we're seeing a lot more new entrants to the market. So this is good news. We haven't seen this for some time. A lot of new companies coming into Vietnam, a lot of FDI coming into Vietnam, and so that the new companies are taking up 42% of the market, and I think that's a very good sign for the market moving forward. The top 5 industries from what we're seeing: finance, insurance, logistics, FMCG, and IT. Some of the new groups that have come into the market, interesting enough, China Fortune Land, one of the biggest Chinese developers in China, are now looking, they've currently set up an office and are now looking for pretty large township opportunities within Vietnam. H&M, I think, is an interesting one, new fashion retailer. They've just taken office space in Metropolitan, and Great Eastern and KMTC, some of the others. So new supply, I mean, we're pretty desperate in Ho Chi Minh to get some new supply into the market. It is coming. So we've got Maple Tree Business Centre in District 7, due for the completion by the end of this year. Leasing up pretty well, I think. We've got a number of interested tenants in that building. And then Saigon Centre Phase 2 and Deutsche House, pre-leasing agreements are active, and this is, I mean, again, a strong sign for the office market at the moment. That pre-leasing activity is probably as strong as it's ever been due to that lack of supply. So new supply coming in 2017, about 110,000 square meters, and based on the current demand, we don't see too much of an effect on the rents for next year. Moving on to retail. Quite an active quarter for the retail. A lot of supply coming through to the market. Demand is on the up because of the new supply. Rents have been affected slightly, but vacancy rates have also crept up as well. So new supply has taken us up to just over 800,000 square meters from 630,000 square meters last year. That's dominated by the 2 new retail centers. That's the Aeon, the new Aeon Center in the International Healthcare Park, and Saigon Center Phase 2, which I'm sure you've all had a look at, because I think this is sort of setting a new benchmark for retail shopping centers in Vietnam, and anchored by Takeshi & Meyer, their first store in Vietnam. And the feedback that we're getting from the retailers and the landlords of both of those developments is very, very positive. Footfall in Aeon for the first weekend of opening was over 450,000 people, which demonstrates that there is demand for retail. And I think we hope that we can see more quality retail developments in the future. Vacancy rates across the board, I mean, still at, crept up a little bit in third quarter, up to 9%. In the CBD, interesting enough, we've got 11% in CBD. That's crept up a little bit as well. But net absorption was pretty high because of those two new centres and the leasing activity in those two new centres. Average rates, rental rates across the board have stayed fairly stable, and CBD has inched up slightly. Non-CBD sliding by about 1.6%. Future new supply or refurbs. So we've got Union Square coming to the market, or relaunching and coming to the market. This has been a little bit of an issue for the owners and developers of this mall. It needs rebranding, repositioning, and they're currently underway with leasing activity in Union Square. Vincom Central Park coming to the market next year. That's another 60,000 square meters, another Vincom mall. And Lemon CT Plaza, about 12,000 square meters. New entrants to the market. We've just had a bit of a recheck of some of the new entrants. Most of them you will know. I mean, Zara is probably the most interesting, the one that's come to the market in the last couple of months. So the new opening in Vincom Centre, I think has been, again, very, very well received, and I think hits the market for that younger generation, the younger population. And again, the feedback from Zara has been very, very positive, and their sales figures have been above target. New entrants, we believe the next new couple of entrants, H&M, Henneys, and 7-Eleven, both actively looking for stores at the moment. We know that H&M are close to, if not have already signed, at least one deal in Ho Chi Minh. Moving on to the apartment market, I mean, big focus again, and I was expecting this quarter that we were going to see a bit of a downturn in the market, but all the numbers that we're getting is suggesting that we're still on a roll in terms of the apartment market. Supply has decreased very, very slightly, but demand is up, prices are up in both primary and secondary markets. So overall stock for the apartment market, currently it's just under 85,000 units. Q3, we added about 8,000, just over 8,000 units. That's down slightly on the quarter, but up 24% year on year. I think the interesting point that what we've seen compared to last year is that the spread of new developments is a little bit more equally spread between the districts now. So last year we saw a lot of developments in District 2 and Bintan District. Now we're seeing a little bit more of a spread throughout the district, so more in District 7, a little bit more so we've got more supply in District 1 and throughout the other districts. So I think that's generally a positive sign that we're seeing more developments throughout more districts. So units sold, and this is the one key area that I'm really surprised at for the quarter. I was expecting Q3 numbers to be down. All the developers that we were talking to were saying, numbers are going to be down this quarter. We're not sort of performing as well as we were. We had Ghost Month in August. We had a number of different factors that we thought the numbers would be down, but our figures are suggesting so 8,000, just over 8,000 units sold in Q3. This is a big number for Q3. So there's no sign of that demand side abating at the moment. We're really seeing that demand keeping up with supply. Total units sold for the year, nearly 25,000 units. Again, this is record numbers for Ho Chi Minh. The spread of units, what we've seen, so affordable sector, around that 7,000 mark. They're pretty evenly split between affordable, mid-end slightly higher, and premium around the 7,000 units. Luxury, as per usual, much smaller number because of the amount of supply. In terms of prices, where we've seen, again, the prices have generally inched up on the quarter. So affordable sector up 2.2%, 8.7% on the year, which coincides with Regina's report, which has grabbed a lot of attention. Mid-end market up. I mean, all markets up. I mean, that premium sector is up 9% on the year. So again, very attractive numbers if you're looking at buying or have bought or are investing in the residential sector at this moment in time. In terms of new completions, so we expect for the remainder of the year another 9,000 to 12,000 units launched by the end of the year. Pretty big numbers. Again, we don't see any let up in the new developments that are coming through to the market. Some of the completed developments over the quarter, so Mastery, Tower 1, Tower 2, the Vincom Central Park, another 1,500 units, and the new launches in the next quarter, we will see Diamond Island, Lancaster, River City, and more Vinhomes Golden River units coming out of the market. So again, very active market. What you will notice is over the next 2 years, 2017, 2018, we see approximately another 80,000 units coming to the market and completing over the next 2 to 3 years. So compared to current stock in the market, about 80,000, we're going to see a doubling of the stock over the next 2 years. Moving on to the villa townhouse, supply slightly down. Demand is still very much there. Prices are on the way up. So overall stock, just under the 5,000 mark, 4,720. Units launched in Q3, about 820 units in the quarter. Down on the previous quarter, but up over 100% year on year. So you can see the spread of new launches as per the districts. So we've got quite an even spread between Yard Bay, District 2, 9, and 12. Units sold, again, a very strong quarter. We've registered 814 units sold in the quarter. Very, very strong figures. And if you compare to the previous quarter, up on previous quarters, and we're going to be way, way above the last 5 years' numbers when we finish by the end of the year. So very, very active times in the villa and townhouse markets. Notably, just under 50% of those sales are in the 5 billion to 10 billion VND range, 250 to 500,000 US range. So 50% of that market is falling within that sort of mid-end range. Prices on the up generally. So primary prices up 2.5% on the quarter and 6.8% on the year. Again, great figures. I mean, these are very, very attractive figures and slightly surprising from our point of view. New completions for the remainder of the year. We expect to see another 1,200 to 1,500 units launched by the end of this year, in Q4 of this year. And then a big spike in 2017, as you see. So we expect to see that the villa and townhouse markets pretty much follow what we're seeing on the apartment side. So we're going to see a doubling of the supply over the next couple of years. some interesting, some notable completions for Q4. We've got Home, which is the 29 high-end villas on the river in District 2, Saigon Pearl Villas, VCP Villas, and the Sala, which is the two-team project, their shop houses there. So just a quick note on M&A activities, fairly quiet. What we are seeing is still that huge amount of investor interest, lots of foreign investors looking at the market and very, very keen to get into Vietnam. The difficulty is always finding good quality opportunities, good quality stock in the market, and trying to find, even with development opportunities, trying to find clean, clear development sites that are ready to go. So still pretty challenging market from the M&A side. Some of the sites that have been sold, I'm sure you may have read, the most recent one, Capital Land, have just bought, just taken over an existing development in District 1. This is, as far as we're aware, this is the first time a foreign developer has managed to get access to a residential development site in District 1. So it's going to be very, very interesting to see how that goes. It's fairly small, 100 units plus serviced apartments, very high-end boutique development. So I think this is going to be a real test for the market and see how that goes. We expect that to be a very interesting development and a very strong interest from investors and buyers in that development. The other transaction, Duxton Hotel on the Wingway, that was a transaction with it was a Singapore group that sold their interest at 49 million, and then Sapphire sold out of their interest in the Sanctuary in Ho Tram. A lot of other deals happening at the moment, a lot of them off market, a lot of them through principal to principal, so we don't have real access to the details of the numbers, but we expect to see Q4 very, very strong in terms of M&A activities. So the outlook, just a very quick review of what we've talked about this morning. So on the office side, supply very much stable, very little supply coming through apart from those 3 new buildings for the remainder of this year, and then Saigon Centre, Deutsche House next year. Again, that pre-leasing activity very, 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 very strong, and we expect that to continue. Lots of new entrants coming into the market, buoyed by the FDI. So office market at the moment looking very, very positive, and we expect that to continue. Occupancy rates at a historic low, which is going to drive that interest, the rents up over the next 2 to 3 quarters. Retail market, I think it's going to take a little bit of time for that new supply to settle in. So the Saigon Centre, Phase 2, the new Aeon Mall, that new supply is going to have a little bit of an effect on the market, and we're going to see some readjustment in the market. So demand is going to be, we expect to see stable. We may start to see some decline in rental rates and the occupancy rates over the next 1 to 2 quarters. Residential market, as we've all seen at the moment, it's absolutely on a tear. We expect, the supply is going to continue coming through to the market. Demand at the moment very much keeping up with supply. So everyone's asking this question, which is the title of our presentation today, supply and demand imbalance. The answer is, at this moment in time, that demand is very much keeping up with supply. The selling rates are very much stable, and at the moment prices are inching up at a fairly steady rate. M&A activities very much stable. That huge amount of interest from foreign capital wanting to come into the market, finding it difficult to find a good home for that capital, but if there's good opportunities, they will be sold, and we've seen a lot more deals happening this year than we have in previous years. Still dominated by the local groups. They still have the access, the speed to be able to do deals much, much quicker than the foreign groups. So any good sites are generally taken up by the local groups. Just a quick roundup in terms of, we did a very quick online survey, and some interesting findings from the survey. So our perception is that we're seeing a huge amount of investors on the residential market. We're seeing a lot of investors on the residential market that are looking to come into the market and flip their unit and make a quick 5-10% capital gain. The survey that we've done asked these following questions. So, purpose of buying a unit. Now, 76% have come back and said the purpose of buying the unit is for living, for their own living reasons, and only 24%, still a fairly high number, but 24% of the market are saying it's for investment purposes. Now, this is contrary to what, personally, I have thought. I thought that number would be much, much higher. So this is a very small snapshot of the market, but if this is an indicator of the market, I think, this is a very positive sign for the market. We are always going to see investors and speculators in the market wherever you are, anywhere in the world. So having some investors in the market, as long as it's a smaller percentage than those living, I think is acceptable. On the residential, on the supply and demand side, we asked about supply and demand. Is there an imbalance in that supply and demand? 88% have said yes, there is definitely an imbalance in that supply and demand dynamic. And where is that imbalance? And everyone, well, that 88% are saying that imbalance is in the premium sector. Again, I think this is fairly well known in the market that we believe that premium sector is facing a little bit of oversupply by maybe one or two developers in the market, and the survey is suggesting that is very much the mindset of buyers at the moment. So I think it's a very interesting feedback. Like I say, it's a bit of a snapshot on the market, but I think it gives us a good idea of what the sentiment is from a buyer's point of view. So I think that is it from me. I'm going to wind up now, and I'm going to hand over to Regina, who's going to give us her views from a regional point of view, and then we'll have some very quick Q&A after that. So thank you very much.
Hi, I'm Regina. I come from Singapore Capital Markets, and I've been looking at property research for about 18 years now. So I feel a little bit embarrassed talking to Vietnamese about Vietnam property, but I just hope that I'll give you a little bit of a perspective of how outsiders see Vietnam and how Vietnam compares with the rest of Southeast Asia. So I came for the very first time in 2006, and then I didn't come again for 10 years. I visited in the middle of July and spent 2 days here talking to developers and investors and trying to get a perspective of whether what we're going through, the surge in sales, the increase in the stock market, is it a bubble? Is it sustainable? Is there more upside? So I did a note on the Ho Chi Minh office and residential market from a regional perspective, and I'll just run you through it. So I think oh my God, it's going really quick. Okay, so I think for outsiders looking at different markets around the world, Southeast Asia is looking like an exceptional opportunity because there's GDP growth, there's demographics, there's an increase in the middle income class, and amongst all the countries in Southeast Asia, Vietnam is stacking out to be one of the fastest growing economies. So Philippines is another one where a lot of people are interested in. Singapore and Thailand are seen to be at the end of their demographic dividend. A lot of the people who are working are going to start leaving the workforce relatively soon. Malaysia and Indonesia are having a slight problem because of the low oil prices. They are oil net producers rather than importers. So when oil prices are low, it affects them negatively. But for Vietnam, what you're seeing is generally a GDP growth faster than the rest of Southeast Asia. And because of the migration from the outskirts into the urban cities, we're gonna get urban population growth close to 3%. And that's the fastest in the whole of Southeast Asia in the next 5 years, as well as all the way until 2025. As you can see, in contrast, in a city like Singapore, urban population growth is going to be less than 1% after 2020. Another thing is, I don't know why this thing is automated. Okay, am I still right? Okay. Okay, hopefully it doesn't go wrong again. So I think another upside for Vietnam is that the economy is relatively immature. So when people look at the middle class, which is defined as families who are making or spending between $10 to $100 per person per year, it looks like there's going to be huge growth in Vietnam because of where the economy is, where the income levels are. So that's going to grow at 18% every year for the next 5 years, which is huge, like double what you're seeing in the rest of Southeast Asia. And because a lot of the economy is still engaged in agriculture, mining, and fishery, as these people move into the services and manufacturing sectors, you're going to see incomes rise. I stopped that. And I think a lot of the export growth after 2011 is because of the competitiveness compared to China. So in 2009, 2010, the gap between a manufacturing worker in Vietnam and China is about $1. But when you compare it to last year, it's gone up to about $2.50 differential. So a lot of manufacturing companies will want to move their plants into Vietnam versus China. And as you can see, the export growth in Vietnam has been running at about 16% over the last 5 years, compared to 6% for China. And actually, China has gone backwards in the last 2 years. And I think what has happened with the growth in exports is that it stabilized the trade deficit, it stabilized the currency. Inflation came down all the way from like 9% in 2012 to, I think right now, about 3% this year. And if you are borrowing to buy real estate, the interest rates will just keep falling because of the lower inflation. And I hear some developers are borrowing close enough to 6.5% to 7% right now, which is very, very attractive compared to where interest rates were historically. I think if inflation continues to stay low, there is scope for interest rates to fall further, which will support capital values. So when I first came, everybody I spoke to, which is about 7 to 10 different people, said that there is definitely a demand-supply imbalance, there's a bubble in the market, the number of units that we have launched and will be completed in the next 3 years is going to double the stock. It all sounds really, really scary. So I asked myself, is there oversupply? Are the prices too high? Is it affordable? Is there speculation? And I think when you look at where Ho Chi Minh City stacks up against the rest of Southeast Asia, the picture is not that bad. So if you look at how apartments have increased in numbers in Jakarta, in Manila, in Bangkok, in Kuala Lumpur, Ho Chi Minh City is still in the very, very early stages of development. So for every 1,000 persons in the city, there's only about 10 apartments in Ho Chi Minh City. So even if we double the stock in the next 3 years, it will get to about 20 compared to about 38 apartments per 1,000 persons in Bangkok, in Kuala Lumpur, and in Manila. So I think the doubling in the stock is not something that's worrying. It's just a very similar path that other cities around Southeast Asia has taken over the last 10 years. So maybe Vietnam was asleep for a couple of years after 2008, and it's just slowly waking up. So I would definitely be a bit more watchful when the stock does get too high. Maybe, after doubling in the next 3 years, it doubles again, then that might be a bit worrying. But in terms of the prime apartments, I do think that we have seen a lot of launches. So prime apartments, we're gonna have about 3 prime apartments per 1,000 persons after all this stock is built, and that's very similar to the amount of prime apartments in Bangkok, KL, and Manila. So I think we might have hit sort of the maximum amount we can have in terms of prime apartments, and actually the city does need more affordable and mid-tier apartments. Yeah, okay, very good. So in terms of pricing, it does seem like there's a bit of upward pressure on pricing, but yet when you look at the last 2 years, prices have gone up just like about 10%, and it's still way below the peak. And another way to look at where prices are is using the rental yields. So despite the fact that rental yield prices have gone up, rental yields are still very reasonable, and the negative spread between bond yields and rental yields have actually narrowed simply because interest rates have come off. So I think it's actually a very healthy situation for an economy where, you know, wages are rising 10% a year and rents will continue to grow that way. So the negative spread is probably going to sort of ease off and sort it out over the next few years as you own the apartment. Yeah, and another measure I love to use is to think about the people who are living in the city, how much they are earning, and how does home prices compare to incomes. So I think the United Nations say that, you know, 5 years of income is cheap, 10 years of income is expensive for somebody to buy a home. And in many Southeast Asian cities, a lot of the lower income groups, they don't own private apartments, and they mostly live in standalone houses in the suburbs. So when we look at home price to income ratio, I consistently use the top quintile income, and I use the top quintile income, which is the top 20th percent, and measure how they would be able to afford the lowest end private apartment. So in Singapore, it would be the 80th percentile household buying the entry-level private condo. And in Singapore, it's about 5.5 years, very, very similar to what you get in KL, Bangkok, Jakarta, and Manila. But in Ho Chi Minh City right now, it's only about 4 years of income to buy a house. And it was a surprise to me, and I had to check the income several times, and I got this number of US $1,300 from the World Bank. And talking to developers and funds, it does seem like, you know, if you're a local working in the city, this is the kind of income you would get if you were sort of in the top 20th percentile of your peer group. And this income, home price to income ratio has also come off from about 7.5 years in 2010 all the way to 4 years now. So right now it's more affordable because we just have gone up a lot and have gone up much, much faster than home prices. So I do think there's upside to home prices. And even if home prices were to rise, say, you know, 10% every year for the next 3 years, I expect that incomes will keep pace, growing at 5 to 10%, such that we'll still get a very, very reasonable home price to income ratio. So I think on that front, there's not a lot of bubble in the pricing here. And the next thing I look at is actually on the stock market. So yeah, our stock market has gone up 25% this year. But when you compare to what it was like in 2006, where the stock market went up 160% in a single year in 2006, it doesn't feel like we are in a speculative sentiment right now. I know a lot of funds are trying to get into Vietnam, but they haven't gotten here yet. So I think if we get even more, you know, momentum in the stock market, then people should get a little bit more cautious, but we're not there yet. So I'm going to move quickly to the office market. Yeah, right now the demand is strong and supply is tight. And I think overall, what I like to do is to take a look at how employment in the services sector has grown over the last 10 years and how has office supply and office demand kept up. And actually in Ho Chi Minh City, it's interesting in that both office demand, office take-up, as well as the employment and business services has grown by about 10% every year over the last 10 years. So I do think that this will continue for two reasons. One is that the city GDP growth is still running at about 5.5% to 6%. Another thing is that we're having migration of employment away from agriculture towards manufacturing and from manufacturing towards services. And if the proportion of people working in services grow from 30% of the economy to 40%, we should get continued demand in office space. So I encourage developers to build more office space, especially because when I look at the stock, we don't seem to have sufficient stock. For the GDP growth per capita in Vietnam of about $2,000, which is about half of what you have compared to the rest of Southeast Asia, the amount of office stock is a little bit lower than what the rest of Southeast Asia has. And you can see it in the rents and prices too. So when you think about office rents and you compare with the rest of Southeast Asia, Ho Chi Minh City looks pretty expensive. It's only slightly cheaper than Singapore and much more expensive than Manila, Jakarta, KL. And I think this is probably a symptom we see in many, many other developing cities. For example, in Shanghai, Puxi, before Pudong was actually developed, rents were quite high because there was not a lot of quality stock. So a lot of people operate their offices out of standalone buildings or out of service apartment rooms. But when the city gets expansion and developed into Pudong, and people get to move into quality office spaces, the amount of rents they pay will actually come off. So some people tell me that the rents were really, really high in Puxi before Pudong was built, but then after that, they never saw those rental levels that they saw in the earlier years, even today. So I think as the stock gets built out, the rental may correct. Another thing about capital values is the spread against the spread of the rents versus the 10-year bond yield. So today, I see that in Ho Chi Minh City, the office yield is only about 200 bips above the cost of debt. And you're getting wider spreads in other cities like Bangkok, KL, and Manila, which shows that investment in those cities, in those office buildings over there, is probably a better use of your investment. And I think the expansion will grow. Expansion is growing because infrastructure is getting built. We're getting a second CBD in the Tutam area, and we're getting a new MRT. So I think I'm gonna conclude. So in my view, the opportunity really lies in building more residential in Ho Chi Minh City, simply because incomes are growing about 10% a year, and home price to income ratio at 4 years is extremely affordable compared to the rest of Southeast Asia. And I think there's upside to pricing, maybe of 5 to 7% in the premium housing, and maybe up to 10% in the affordable segment. Office demand is likely to be strong, and we do need more offices to be built, but the current rental seems a little bit high compared to the rest of Southeast Asia. Yeah, and this is all I have. Thank you.
Thank you very much, Regina. I hope that was a very interesting insight from Regina from a regional perspective. Lots of key takeaways there. So any questions and answers? We have a quick Q&A session if there's any. And if not, then we can have a networking session outside. So if there's any questions from the floor, where's the usual suspects? Brian or Chris or Leon or one of the usual, John, always ask a question. No? Not today. Everyone's shy. No questions for Regina.
Hi guys, this is Ian. Great presentation. Just wanted to ask a question I think you guys didn't touch upon was access to financing, which is a big part of demand for real estate. So we'd like to get some color on that.
Financing. Interesting. I think the guy from HSBC has just left, but he would have been a very good guy to ask that question to. So HSBC, quite interesting enough, are now financing projects again, which was quite a new one for me that I learned about this morning, although they've been doing it for the last 2 or 3 years. Financing is very much there. Local banks, very, very keen to finance. If you go to any of the local banks at the moment, they will be more than happy to lend you considerable amounts of money. As Regina touched on, interest rates, depending on the project, depending on the bank, ranging from sort of 7 to maybe 9, 10%. From a local bank, it's fairly straightforward. From the foreign groups, a little bit more selective, I would say, and tend to be a little bit more conservative for all the right reasons. What we've seen is, I mean, credit growth for the year. I mean, we're tracking about 18 to 20% for credit growth for the year. So, you know, there's a lot of pressure, I think, from the powers of be, from government, from high level, to really get this GDP growth going. So they're really trying to push credit growth and get the real estate market growing. So the downside to that is that we still have the hangover from the last cycle, so a lot of non-performing loans that haven't been addressed from the last cycle. The banking sector, the local banking sector, for me, they're very, very highly leveraged on some of these projects, and there could be, you know, some concern in the future if and when the property market starts to slow down. But at the moment, I mean, credit is certainly there and is very easily accessible. I don't know whether you have anything to add.
Thank you.
Once in a lifetime opportunity to ask Regina. But if there's nothing else, we can maybe have a break. There's lots of JLL guys in the room, so any questions that you have, just pick a JLL guy out and give them a nice big instruction. Just sign the contract on the way out, no problem. Thank you very much for attending. Really, really appreciate all your attendance. I know you're all very busy guys. Any questions you have, just let us know. And hope to see you all again soon, probably next quarter. So the big thing, actually, for next quarter is we're going to have the US elections. This is the one thing that could put a spanner in the works. Mr. Trump could be here for you. I'll leave you with that thought. Thank you very much.